Good afternoon, everyone. This is Brad Matheny. Today's the 26th of July. This is a very simple SPY chart with my new Bollinger Band system. Let me modify this just a little bit. This is fairly tight. I normally would run this a little more open. And let's go ahead and take a look here. So, as we're struggling with the counter trend top resistance pattern, which should have reflected into a bottom support pattern, you can see that we had a very tough morning trying to get out of this range. Really, you can see that we opened a bit higher, but really had a tough time above this 541 support. Finally moved into some upward trending here, had a big broad pullback, and I've drawn a Fibonacci extension on it from this basic low down here to this move up here. And we now have a target at 549.65 and 552.96, call it 553. If we're going to see some sort of a moderately strong upward movement, we are going to see a pretty strong channel trend back to the upside, setting up above this support level or below. Yeah, but price will be above the support level. Support level is this level here, moving to the upside. And this is really what I need to see. I need, and I told everyone this earlier, I need to see the SPY move up above this 550, 551 area. It's me. Until we get above that level, I am not confident that this market has legs back to the upside. And I've shown you that we're, in a very strong standard deviation channel to the upside. We don't have much to worry about here, but, this has been 3-4 days of downward activity. And we're looking at moderate congestion. You can see the range. I just drew this. This is our quote unquote ultimate high. This is our ultimate low. We're looking at this as a bottom ultimate low level. This is an ultimate high level from yesterday. We're unable to break away from that channel. And when price is unable to break away from that channel, we move into tighter and tighter consolidation. So I would be looking at a newer ultimate setup. This right now sets up a unique setup, possibly an ultimate setup. We'll see. But again, we're looking for the markets to either resume back into the rally, which is what my SPY cycle patterns say, or sell off downward, which would be greater fear. And I don't necessarily believe we're at that stage yet. So bias-wise, I'm fairly confident we're going to move back into the upward trending that I've shown you here. I expected to see, and we could get a fairly solid move higher. You can see why this gap window, this 550, 551 area is so important to me. I want to see it move comfortably back into this gap window and possibly closing this big gap window here before I'm going to say that we are capable of attempting to move higher. And again, this is a standard deviation channel here. We've come down off a 3x standard deviation down here, rolled very low, got a nice little rolling bottom set up here. We need to see this really carry out further back to the upside. And we may not see that until next week. Okay, I'm going to be honest with you. We may not see that until we get over into this trending here. Visual order, bring to front. Visual order, bring to front. Visual order, bring to front. And visual order, bring to front. There's one more down here, which is Monday. Come on. There we go. So yesterday was a bottom reversal type of pattern. Today is a top resistance and counter trend mode. I'm interpreting that as a base rally type of trend or base support type of trend. And then we have over here on Monday, we have a flat down in trending mode, depending on where we close today. Then we get a pop in carryover mode. And that pop trigger really needs to be confirmed with some sort of an upward trend here. So, we have the flat down trigger here on Monday. The flat down on the 29th, the pop, and then the base rally, bottom rally start in counter trend mode, which is again counter trend puts us in a pullback. So I need to really see this move up on Monday and today, and potentially move up into this area, which can give us a big pop, which can then move us into this topping pattern, and then we move back into the base rally trend mode and the breakaway mode, which again moves us back into this base rally and breakaway type of trend. So I really am looking at this level, guys. I hate to say it, but in my opinion, we're taking on water until we get above this level. Now, an aggressive trader could be buying deeply into these lows, could be buying deeper into this support level here, and really trying to take advantage of deep, deep lows. I'm more of the conservative style in the sense that I am looking for, and I explained this to clients earlier. So, for example, when we get a trend, and we'll just hypothetically take a look at here, we'll go back to the 10-minute. And this is more my style, guys. Okay, so when we get a trend and we're seeing this move, we'll go from rejection, which is roughly right here, up to rejection up here. Okay, there is a commonality among Fibonacci that says once we get a retracement of 25% to 382 with some sort of confirmation. So you see how we've got this downward trending here in the Bollinger Band system, the red background. We can then look to try to target the 5.0 level here or here, and the 618 level here and here as very easy targets. So again, confirmation in this area, lower high, continued confirmation of the downside means that I had an objective target here or here off of a trade anywhere from this area here that I could have just as easily with a stop level up here gone into, and I'll change this to blue so you can see it, but it makes it very simple in the sense that target 1 right here, target 2 right here, and again, very easy trade to be able to identify, load up in this area. And I'm looking at a 22-cent move here. Not a lot, but like I said, this gives me the opportunity to actually take the trade. Now, we have the same taking place down here. So we'll get rid of these, get rid of that, get rid of that, get rid of this, get rid of this, and get rid of this. And we'll come down here. We'll do the same Fibonacci going down to these rejection points, starting from way up here at this rejection point. And now we have the 382 to 25 move right here, indicating our trigger. We need confirmation, which we have on the Bollinger Band system and the anchor band system. My targeting systems would be here at the 618 and here at the 50. We would be looking at a very solid load up channel in this area, meaning anywhere in this area we can be loading up, and we are going to be looking for a move roughly from this level to this level, 18 cents to 31 cents on the SPY. And again, this is a 10-second chart. So you can see that when you get into this type of confirmation, all you need to do is know the previous downward wave or upward wave and use this confirmation type of trending. My stop level would be down here, and it's a very simple concept to replicate over and over and over again using Fibonacci, and it gives you a very clean primary target, which we just hit, and then a secondary target right here, and then you could leave a runner if you wanted to try to trail upward. When we hit the primary target, our stop level moves to this level. When we hit the secondary target, our stop level moves to this level. And then once we continue further up to 7.5, we would move our stop level up here. So we're guaranteed. And you can see we just about hit our second target. See what it's going to do here. This 10-second chart is very short term, much tighter than I would normally be trading. We are currently setting with our stop down here. We've only hit our first target, so our stop is right here. We need to see it get above this level to confirm our second target. It may happen. Like I said, 10-second charts go very quickly. And here we go, rolling back down. And this is why we set our stops. In case we're wrong, we have a very minute loss. Now, the other thing I should talk to you guys about while we're going through this is position sizing. So remember, we are still struggling to get into an upward trend, in my opinion. Because of that, I would have been trading 1/4, 1/3 my normal position here. I would not be swinging for the fences trying to trade into a long trend in a general bearish downward trending. We want to trade smaller so that we do not try to bet the farm over and over again, going counter to the longer term trend. The short trade, I may have been trading half a position or a little more, but long and short of it, like I said, guys, you do not want to move away from your risk containment rules. Okay, big washout here. We'll see what happens. Running into some resistance. This is a previous resistance area right over here. You can see this rejection. So we'll see how this plays out, but we've come close to the second target a couple times. Pull back again. Deeper almost. This is technically a double low, or was. All right, we're stopped out. So now normally I would be watching this to see if we bounce at this rejection point, but any close below this level will get us stopped out. And again, you could have been booking profits back up in this area if you wanted to, but this is a short-term, truly Fibonacci system. And again, guys, remember, we are really still just trying to struggle to get out of this move. So we've got a ways to go. This day today may end up seeing a little bit of a short squeeze, but it may end up being a whole bunch of nothing. So we may have to wait till next week to see what happens. Okay, guys, that's it for now.